Hello and welcome to our latest urgent market update video, which is brought to you by the live trade room. Now, this is Monday, the 6th of November, 2023. Now, we kind of delayed producing this video until the full range of news events over the course of last week, because we've got some interesting conclusions to draw. So we'll be looking at what we regard as some really great trading opportunities now setting up after what was an extremely bullish week. So let's break it down for you in a little bit more detail. Okay, so welcome to this short video. We do hope you're keeping well. So look, we want to break down and point out the fact that we've got a couple of really great trading opportunities beginning to set up. Now, if I just explain why we had a bullish week to begin with, that's probably a good place to start. If we can start with a risk warning just before we get in, we'll break it down as best we can. Okay, so let's get straight into it then. Let's bring up Forex calendar from last week, and we'll have a look at some of the events over last week. So we can probably go back to the FOMC on last Wednesday night, and the markets were pretty much expecting the Fed to hold rates at 5.5, and that's exactly what we saw. But where all the volatility came from was the press conference. We had Jerome Powell. Now, he had a pre-prepared press statement, as he always does, and he was answering all his questions clearly off the back of it. And it was very sort of orchestrated and prescribed. And what he came out and said was they think that interest rates are significantly high enough. They think to actually have that downward impact on inflation, but they don't know. There's a lot of unknowns. There's a lot that can happen. So they want to give themselves the opportunity to raise rates if the conditions change and things require that to be the case. However, what was interesting to see was the initial market response basically looked at what the Fed have now said and the fact that they've paused for the third consecutive interest rate hike meeting. So we've paused for a significant amount of time, and now the market is trading against the Fed effectively. We've heard from Jerome Powell saying that they're looking to stay higher for longer. We may increase rates, and they're really not taking that rate pivot into account. They're not even discussing it at this stage. It's far too premature. Now, the markets have completely ignored all of that, and they have started to rally quite considerably, with the expectation that the Fed will start to lower rates sooner rather than later. So that's the overall position as things currently stand. Now, that was slightly reinforced with things like the ADP number, which came in way below expectation. We'll remove job jolts because that actually came in above expectations. So that's slightly off-putting. But we've also got these other economic indicators like manufacturing PMI, the ISM manufacturing PMI numbers, coming in below expectations. So we are seeing softening, not just in unemployment numbers, but across other economic indicators. If we move this on to last Thursday, we heard from the BO, the Bank of England, and we had Governor Bailey speaking as well, holding rates of 5.25, even though inflation is currently above the 5.25 interest rate for the UK economy. And rolling on to Friday, we were looking for the big one, which is non-farm payroll. This is government figures on employment numbers coming in, close to 30,000 jobs less than expected. So that's really quite significant, with the unemployment rate ticking higher. So we are seeing the softening that we would anticipate in many of these markets, and also the ISM services PMI numbers again coming in below expectations. So we're seeing a bit of softening across a variety of different areas. So let's bring up the charts, and I'll show you what the net result of all of that information was since we opened, we actually gapped higher in the S&P and we saw just a very, very bullish trading week off the back of what was bad news, positive market reaction. So just to emphasize this fact, I'm going to put a bit of an arrow to the upside from bottom left to top right. So a really, really strong move to the upside off the back of what was, as we've just demonstrated, fairly negative market news. Now that negative news will become a bit of a problem because it's going to start impacting the consumer if we start entering this recession, which is what many are anticipating. Then that's bad news for equity markets because currently they're benefiting from higher prices because of higher inflation. So their corporate earnings are performing pretty well. But once that recession and that demand story starts to hit in and the consumer gets a bit squeezed, then that's a bad news story. That will mean bad news will actually mean a bad market response. So we're not done with the downside trade by any stretch of the imagination. And where we identify some potentially decent opportunities is from a technical perspective, looking at these markets, we can see we have a kind of an upward trend line just moving through this area in here. So there is the potential for a little bit more upside, but in and around this little zone, we would be certainly looking for some further sell trades. What we also have in here, broadly speaking, is a certain level of resistance. So this was an important level. We said we might get a little bit more upside, but when this market starts to roll over, we are looking for a fairly decent sell trade because we don't think this market is finished with that downside move. And as you can see from a technical perspective, we are very much in this downside bearish market cycle. And last week's price action, as far as we're concerned, is nothing more than a very, very significant corrective move. It's a strong, strong pullback. Now we're looking for the point at which this market, somewhere inside this little zone, starts to roll over to the downside, at which point we look to trigger those sell trades accordingly. So this is why we think last week's price action is likely to give us some decent opportunities. Same situation for the Dow Jones, strong pullback into strong resistance. There's your resistance levels just inside this little level here. So is there an opportunity to start selling? We think there probably is. Last couple of markets, if we look at the NASDAQ, for example, you see exactly the same type of setup. And anytime you get a pullback in a primary trend, you get that secondary trend trade, which is the short-term pullback, you'll be looking for the next leg to the downside. And that's pretty much what we're doing. So technical analysis on the NASDAQ, as you can see, we are in a range where we'd be looking for this market to roll back over to the downside. So hopefully some decent opportunities for us to exploit in the not too distant future. So do keep an eye on these trades. The last one is the DAX. Very similar analysis. We're seeing lower highs, lower lows. And last week we saw a really strong pullback creating this high. And now we're going to get this where we're potentially looking for the next opportunity to start selling and see if we get prices. We don't have to make these markets don't need to make new highs. This could be the beginning of a potential reversal across the board. We want to keep that in mind, but we're talking about a short-term corrective trade, and that's where we'll identify hopefully these decent opportunities in the not too distant future. So hopefully that just breaks it down. We do have some. We'll be hearing from Jerome Powell during the week as well. So we need to keep all this at the forefront of our minds. And what it is actually doing, these kind of current market conditions, and more so from a technical perspective, it's given us some decent opportunities to look out for. The first one being the S&P 500, to look to sell below that 4,363 low. So keep an eye out for that price. Same with the NASDAQ, looking to sell below 15,090 level. It's creating a structural failure trade up at those highs. So when prices start to roll and break below these particular lows, then that could give us a decent opportunity to pull a trigger on some sell trades. And same with the DAX, looking to sell below the 15,140. And if you look at them on smaller time frames, you can see the potential are at a point at which these prices would start to kick in and give an opportunity for sellers to start selling accordingly. Okay, so on that note, we do think that last week's bullish market condition could present some very significant sell trades. So if you do have any questions about anything covered, don't hesitate to post them into the chat box. And all that's left for me to say now is thank you very much for joining us for this short video. Do stay tuned for our next video when we have some information to bring to you. Do track us there. And just to let you know, we do broadcast our trade plan sessions live from 7:30 a.m. every morning, where we do all our analysis, fundamental, technical, and also sentiment analysis as well. And we do then trade the markets live every day from 8 a.m. for the European session, and then we're back again at 12:45 p.m. for the US Cash Open. So if you do want to join us, you're more than welcome to do so. For more information, just go to livetrading.com, and we look forward to hopefully seeing you on the inside. For everyone here, do take care. Bye for now.